So, tip number one, how do we prepare for getting a mortgage, and what are the pitfalls that you see?
Yeah, I'm probably going to answer the first and second tips almost in the same sense here, Megan, because it comes down to I guess being bank ready. So lending is going to get tougher. There's going to be more scrutiny over what you are showing the bank, what the bank wants to know about you. Credit checks are becoming more invasive, so they will know if you're late paying bills essentially down the track, and they will want to know how you're managing your money. So to be ready to get lending these days, you need to have an absolute clean set of bank statements. So no dishonor fees, no unarranged overdrafts, no missed payments on mortgage payments or anything like that, because they're just basically red flags. And what that tells the banks, especially if there's more than one of those in a reasonably short space of time, that you don't know how to manage your money. And when you look at it from your own perspective, if you were going to give your money to somebody, wouldn't you want to make sure that they kind of had a way or knew how to handle their money? And the bank is no different. Yes, they're a business, but they want to make sure that you're going to manage your finances properly, and the money that they're entrusting you with, that you can handle that. So they're looking at how you're spending. So if you've got multiple visits to, say, Sky City, that's probably going to raise some questions. If there's multiple visits to the local liquor shop, and I'm talking one a day or a couple a day, they're going to pick up on things like that, and they're looking for patterns and analysing expenses and wanting to see how you're managing your money. So those are the key things to be prepared for from the start. But we have others that turn up with lots of debt, like lots of credit card debt, personal loan, car loan, student loan, and then they want to go and buy a house. And so the bank's looking at all that debt and going, you simply can't afford to do this at all. So banks have what they call test rates. They'll assess a loan at a certain level of interest, which is way above what you would normally pay, because they want to make sure that you've got some latitude to move if things change. So imagine if a bank lent you everything you could afford at today's interest rate, or the best interest rate today of 2.55, and there was one increase in interest rates, or the car broke down, or your teeth needed doing, you have no fat in the system to spend any more money or find money anywhere else. So they make sure that you've got a lot of gap between what you'll pay for the mortgage and what you might, what the test rate will be, to make sure you've got spare capacity, because we all tend to probably spend a little bit more than what we should. And the banks know human nature. People will cut corners to buy a house and cut down their expenditure, but they'll also splurge at times as well. And they just want to make sure that people are ready and able to borrow this money and handle it well.
Yeah. How far do they generally look back in finances? Like if you're looking ahead, making those changes now, if you say right now, I'm not maybe great, what do I need to change? What sort of time frame would you recommend to make those changes? 6 months, 3 months, a year?
Two answers to that in some way. So they're looking at 3 months transactions, 3 months of bank statements from your main account where income goes in and expenses are paid from. They'll look at that. They'll look at 6 months mortgage statements to see if you make sure you've been paying your mortgage for that 6-month period. And they'll want 3 months credit card statements. They'll look for current loan statements in general, like car loans. They'll want to see that there's been a pattern of payment all the way through. Those car loan statements tend to go for the entire duration of the loan, so you can't really hide anything in there. If you do have some anomaly, shall we say, in your personal bank account that are older than 3 months, then need to wait the 3 months. We'll take you off to another bank. They'll look at those. They may, if there's bigger issues, then obviously we need to know about those and disclose them. But 3 months bank statements, go to a new bank, clean start, and you're all good. If we're doing that with an existing bank, they've got all your history, and they will look at all your history, and they will see whether there's been red flags in the past.
Yeah. Oh, that's fantastic. They're great tips for that. And I guess we've done that, what banks are looking for. So that's what they're looking for in that. Budgeting, that would be a great thing to do, especially in this lockdown situation, is to take a really good look at what you're spending, where you're spending it. Do you have any, we haven't actually talked about this, but do you have a budgeting app you recommend, or a website that people could look at just off the top of your head?
I don't. It's called a spreadsheet. And I think the best thing about a budget is you got to keep it simple, because people can get, you come up with all these great ideas about how you want to do something, but it's the maintenance and the overhead. It's a bit like paying down a mortgage. There's no magic silver bullet to paying down a mortgage. There's a couple of things that you should do that will help, but human nature is we don't want big complex systems that require us to manage processes. So a spreadsheet's good enough for that, definitely.
Great. Yeah, great. All right, that's good. Just stick to basics and do it. Just do it. Yeah.
Do it is the key. And
yeah,
lockdown fatigue. If you give people a complex process to pay down their mortgage, they'll get fatigued with that over time. It's a bit like like lockdown fatigue. We get tired of being locked away. We want to go and do something and splurge. So it comes down to discipline at the end of the day.
Yeah. Great.